Okay, so let's have 10-1. The question here is how much would be the revenue from franchise fee? And again, the first question I want you to ask is whether or not there is already substantial service. And the problem tells us that the franchisor fails to render substantial services and none thus far had been rendered to the franchisee. So in this case, do we have any franchise revenue? No, because no services were ever rendered. We don't even have to check for the exemption class because again, in our exemption, there must be some amount of service to be provided. Here, no services have been provided. So from that information alone, we will be able to say that the answer would be 0. But what was the mode of payment class? Everything was paid in cash. But again, will that affect our recognition of franchise revenue? No, it will still not be recognized as a franchise revenue. But what will happen to the cash you have received? It will give rise to a liability. It will give rise to unearned franchise revenue or deferred franchise revenue. They represent the same item. So if you were asked in this problem, how much is your deferred franchise revenue? Your answer would be the entire 500,000. When will you be able to earn that unearned franchise revenue? After you have provided substantial service, but definitely not in the current year. Okay, so very straightforward. 10-2. What is the net income from franchise fee of the franchisor in its December 31 income statement? Again, as I've mentioned, revenues minus expenses, and your revenues will normally come in two forms: revenues from initial franchise fees and continuing franchise fees. Let's see what we have here. We have 5 million franchise fee. Let's check if we have earned this 5 million. Were we able to provide substantial service, class? Yes. And normally, class, if the problem says that the franchisee was able to commence operations, that will be an indication that substantial services were already accomplished. Okay. Not all problems will give you substantial service, class. It will just tell you that the franchisee was already able to commence operations. Okay, that will imply that substantial services have already been performed. So that means we have earned the entire 5 million because how was the 5 million paid, class? It was paid in full. Okay, it was paid in cash in full at the time the contract was signed. And since we have already substantial service, we can say that we have already earned the entire 5 million. Any information for continuing franchise fees, class? No. So, but we have expenses here in relation to the rendering of your franchise services, class, in the amount of 50,000. Since we have earned the entire 5 million, you deduct the 50,000. Your net income here would be 4,950,000. Next problem, question here is, what is the revenue from franchise fee? Okay, and the initial franchise fee per the contract is 500,000. And how was this paid? 100 upon signing, and the rest evidenced by a promissory note to be paid in 2 annual payments of 200,000, beginning on December 31, 2016. Were we able to provide substantial service, class? Yes. So what's the next question to inquire? Mode of payment. Mode of payment is 100,000 cash, 400,000 promissory note. Any mention about refundability, class? None. So that means we will recognize the 100,000 already as a franchise revenue. Next. As to the promissory note, class, what will be the next point of inquiry? You inquire as to the collectibility. And what does the problem say? The note is collectibility of the note is reasonably assured. So what do? We will use full accrual. By the way, how much of the 400,000 promissory note was collected during the year? Only 200,000. But how much on the promissory note will be recognized as a franchise revenue? Already the entire 400,000. Why? Because collection is reasonably assured. So the 100,000 cash, which was already earned, the 400,000 promissory note, partially paid only, but fully earned. That means our franchise revenue here would be 500,000. 10-4, using the same data, assuming the collectability of the note is not reasonably assured, how much then would be the franchise revenue? Again, if collectability is not reasonably assured, you will use installment method. And under the installment method, revenues are only recognized if there are collections. So as regards the 100,000 down payment, no question, that will already be a franchise revenue because again, we already have substantial service. The issue now is on the promissory note. How much was the total value of the promissory note? 400,000. We do not recognize the entire 400,000 because again, collection is not reasonably assured. Is there any portion of the 400,000 that we can already recognize as franchise revenue? Yes. What portion is that? The portion that is already collected. And how much was already collected? 200,000. Collected when, class? December 31, 2016. Okay. So how much then would be the total franchise revenue for 2016? The answer now would be 300,000. If you will be asked how much would be the unearned franchise revenue as of the end of 2016, the answer would be 200,000. Okay. Let's have 10-5. Question here is using the installment method. What's the scenario here? Franchise fee is 5 million. 2 million was received upon signing of the contract, and the balance was paid through interest-bearing promissory note that will require 3 annual installments of 1 million. Were we able to provide substantial service, class? Yes, it says Pizza Incorporated rendered initial services required. Okay, and again, what is our what will convince us further that there is already substantial service, class? The franchisee already started operations. Okay. Since a portion of the fee is through a promissory note, we will have to inquire as to the collectability. What does the problem say? Collectability of the note is not reasonably assured. Okay, let's deal with the down payment of 2 million first. Will the 2 million be considered earned already and will it be recognized as a franchise revenue? Yes. Next, as to the 3 million, will the 3 million balance be recognized as a promissory note as a revenue? No, because collection is not reasonably assured. So what do we do if collection is not reasonably assured? You use installment method. And under the installment method, revenue is only recognized when there is already collection. So question now is there a portion of the 3 million that will be reported as a franchise revenue already? Yes. Why? Because there was already a collection. How much was collected? 1 million. So if you'll be asked how much is your total franchise revenue for 2016, your answer here would be 3 million. Okay, but the question is for your realized gross profit, class, under the installment method. And what do we need if we compute for realized gross profit under the installment method, class? we need to compute for the gross profit rate. And how do we solve for the gross profit rate? Gross profit over total revenue, class. The total revenue here will be the 5 million, but the cost is how much, class? Only 500,000. To earn the 500,000, we only needed, to earn the 5 million, we only needed to spend 500,000. So that means 5 million minus 500,000 will give you a gross profit of 4,500,000. 4,500,000 divided by the total revenue of 5 million, that will give you a gross profit rate of 90%. You multiply that with your franchise revenue earned of 3 million, your realized gross profit here would be 2,700,000. (10-6) will now include will already introduce the effect of imputed interest, class. Here, the promissory note is non-interest bearing, so that means the face amount includes an interest component. And you have to understand that only the principal component will go to your franchise revenue. The interest component should initially be reported as an earned interest income, which will be earned not through rendering of service, but will be earned through passage of time. Okay? So on July 1, 2016, question is how much is the unearned interest income? How much is the face value of the promissory note, class? 800,000, because the total is 1,200,000 and then 400 was paid in cash. 800,000 payable in 4 in equal annual payments of 200,000. Now, which of the factors are you going to use here? 0.59, 1.69, or 2.91? 2.91 for ordinary annuity, since the first payment would be, since this involves a series of payment, and the first payment is on the next reporting or after one compounding period. So 2.91 times 200,000, how much would that give us? 582,000. What does that mean? That is the principal component of your 800,000 promissory note. So only the 582,000 will eventually be recognized as franchise revenue. But the face value is 800. What do we do with the difference? It will be treated as an interest. But again, it will not yet be recognized as interest income because again, interest income will be earned through passage of time. So at the date of the issuance of the promissory note, the total interest imputed in the embedded in the promissory note will be recognized first as an unearned interest income. How much is the interest component, class? 800,000 minus 582 will give you 218,000. So the answer there is 218,000. Using the data in the previous problem, what is the deferred revenue from franchise fee? So to answer this one, we need to inquire as to whether or not substantial services have already been rendered. What does the problem say? It does not say anything. But in this problem, we have not provided substantial services. How do I know that one? Because the question is on July 1. And when was the contract signed? July 1. On the day the contract was signed, we do not expect the franchisor to be able to accomplish substantial service. So that means substantial service have not yet been rendered. But why are the choices? Why do the choices not include 1,200,000 plus? Because again, your total franchise revenue here will not be 1,200,000 because the 1,200,000 includes interest, potential interest income. So you remove the interest component, class, or break it down. How much was the cash, class? 400,000, and then the principal component of your promissory note, 582. So 400 plus 582. Your total unearned franchise revenue would be 982. Why is it unearned, class? Because again, we have not yet provided substantial service. How did we know? You are asked as of the same day the contract was signed. 10-8. On January 4, 2016, Selecta Ice Cream Incorporated signed an agreement. Let's go to the question. What is the net income? And again, net income, revenues minus expenses, and your revenues would be from the initial franchise fees and continuing franchise fees. Initial franchise fee here is 500,000. Were we able to provide substantial service already, class? At which date all of the initial services required of Selecta had been performed already. So we already have substantial service. How was the 500,000 paid, class? It was paid in full, okay? Franchise fee of 500,000 received when the agreement was signed. So it was paid in cash and it was already earned. So that means your initial franchise fee here would be 500,000. Okay, next. Do we have continuing franchise fees here? Yes, the problem tells us that the agreement provides that the franchisee will pay monthly a continuing franchise fee equal to 5% of gross sales. And how much was the gross sales, class? 400,000 times 5%, you would get 20,000. So your total revenues here would be 520,000. But you will also have to include the cost for the substantial service class following matching principle. Okay, so you deduct the cost of 10,000. Your net income here will be 510,000. Answer for 10-9 class. You practice on this class. Is Bravo. 10-10 is Bravo also. Ten 11 is Bravo. Ten 12 is Alpha. 10-13 Charlie. I'll give you the rest of the answers once I have them, class. I'll just share it to you through your class rep.